Charles Robertson, at RedCapMan on Twitter. Pleasure to have you here today.
Thank you.
Charles, you attended the Kenya Takeoff Conference for the last 2 days, and you've also were a speaker, and I'm going to get to that in a moment. But what are your impressions of the conference?
I've been amazed. It's one of the best conferences I've attended. I've never been at such a place where so many of the policymakers are in one room, actually giving presentations to each other, to outside external experts, bringing in external experts from Korea to Brazil, all flying into Kenya to offer their best advice. Shockingly good.
Excellent. And what do you think of the Kenya takeoff? Do you think Kenya is positioned to take off? What is your call on that?
The book that we wrote, The Fastest Billion, is
I didn't mention that.
No, it's fine. Yeah. But the book, The Fastest Billion, is all about this being a sub-Saharan African theme. That's not every single country, but the majority of countries are seeing something dramatic happen. And you've seen a huge increase in export value. A lot of that's to do with commodities. You've seen a boost in trade to China. That's all happening. But the more we looked into the work, I think I came to the view that it was education and the changes in education over the last 30 to 40 years that had really made the difference. That in 1975, 9% of children of secondary school age in sub-Sahara were actually at secondary school. 90% of kids were not getting an education at secondary school level. So investors, global investors, were choosing to put their money into Turkey or Mexico, where 25 to 30% of children were getting a secondary school education. Now the figure today, or 2005, the latest figure for sub-Sahara is 29%. So we are now in sub-Sahara at the same level that Turkey and Mexico were when they began their takeoff in the 70s. Kenya's in an even stronger position. There it's about 50 to 60% of children are now getting a secondary school education. And that is, I think, part and parcel of what has helped drive the takeoff. You've got the best educated demographic in Kenya there's ever been. And you're seeing that then rewarded with foreign direct investment across the continent, East and West Africa, in all sectors, from shopping malls to mobile phones, as well as to oil and mining. And that takeoff, I think, is helping to drive growth from the 2% or so levels that we used to see in the 80s and the 90s to the 5-6% that we're seeing now, and to the double-digit growth that we think we'll be getting over the next decade or two. Is
that a realistic expectation that the government has, which I think the President in his opening remarks spoke about double digits in 2018? Do too many things have to come right for that to happen, or can that happen?
It's possible, but when you look back at 2000 to 2011, all of the countries that have been growing at double-digit rates, I think perhaps Myanmar is the only exception, but all the others are exporting energy. Yes. That's what's driven the 10 to 13% growth rates you've seen in places like Equatorial Guinea, for example. So that's going to be tough, unless Turkana and the oil discoveries...
There's a lot of optimism, I mean, from Mozambique up to Somalia, it seems to me.
If that comes through,
yes,
within 5 years,
yes,
then yes, it's possible.
I saw an interview comments you gave to AFP yesterday, where you said you had no hard evidence that there was oil and gas.
I can't find it. I've hunted on Google. I've listened to the CEO of Tullow Oil.
Yes, it was incredibly bullish.
I've yet to see him place a figure on the barrels per day that he thinks will be coming out in the next any period of time. Okay. So I'm not saying that there isn't. Yes. I mean, he's optimistic. They've delivered in Ghana. They've delivered in Uganda. I imagine they're going to deliver in Kenya. But I haven't got any numbers to base that forecast on yet.
Now, going back to the numbers that you delivered in your presentation, which was very compelling, you talked about a $1 trillion economy.
Yes. And that, what I'm comparing sub-Saharan Africa, and Kenya's obviously a huge part of that, is to India, but about at a 20-year lag. And I'm comparing India to the 27 countries of developing Asia with something like a 10-year lag. And there's been remarkable similarities. And I suspect education may well have played a role in each one of these takeoffs, and sub-Sahara is now there. And what that showed you in India was that they had 20 years of what they called Hindu rate of growth, 2% a year for a generation, just like sub-Sahara in the 80s and the 90s. And then just like sub-Sahara, it jumped 5 to 6% a year. And it's kept on accelerating. You get down years. India's having a down year this year.
Terrible,
But it's still, even on a terrible year, going to grow at 4 or 5%, which isn't bad.
Yes.
And it wouldn't be a surprise to me if we see that rocketing back up to 7 or 8 within the next year or two. And what I'm basing our forecasts on is the idea that if India's been copying developing Asia for 20 years, if Sub-Sahara's been copying India for 30 years, then let's draw out where that's going to take us, because it looks like Sub-Sahara is roughly where India was in 1990.
Is that the whole of Sub-Saharan Africa?
As a mass. Now, there's countries that are more advanced, and Kenya's actually one of those, which is a little bit better off than the average. But if we take that as 1990, you've had 10 years of good growth. And what do governments do after 10 years of good growth? They begin to see the constraints. And the constraints in India in 1990 were infrastructure, not enough power, not enough airports, not enough roads. And
it's a similar story.
Very similar story. And the government began to push resources and investment into these sectors. You go back to India now, and it's amazing, it's transformed. As far as I'm concerned, it's so much different from what I saw in 1990. But still, they don't have enough power. Still, they haven't got enough in the way of roads. They still have traffic jams in Mumbai, which upset people. And I think what that's telling us is that however much the government invests here, they will struggle to invest enough. I just think the demands are going to be so much bigger than anyone can imagine. But what's really encouraging...
That's what you're saying about traffic, I think.
Exactly. So the number of cars sold per year across Africa, we think, is going to grow tenfold in the next 30 to 40 years. So instead of 4 million cars a year, 40 million cars a year.
How does this... Give it to me in a 5-year... Do you have that sort of data?
I do. It goes... I mean, it's roughly doubling.
Yes.
For the air traffic, I remember that more easily because it literally doubles from roughly...
You're very bullish about air passenger traffic.
Indeed. It's 100 million flights, slightly more, in Africa today, 2010, a year. And as per capita GDP rises, that doubles every year. It'll be 200 million by 2020, 400 million by 2030. It'll be about 1.7 billion flights a year by 2050, which means if you're building a new airport outside Nairobi, you need to imagine that there will be 17 times more people using that airport in 40 years' time than today.
That's a scary thought.
It is a scary thought, but it just means plan big, invest as much as you can, and that will find its rewards.
Do you think the government is planning on the scale you're describing?
Well, that's what's so impressive about two things here. And I think it's what marks what I find in Sub-Sahara today. So it's so much... I think it's in a better place than countries of Eastern Europe that I covered 20 years ago when they were becoming emerging markets. There is a Vision 2030 is indicative of the fact that governments are planning ahead. They can see what's happened before in Asia, Latin America, Eastern Europe now, and they can take the best of that, the business reforms we see in Rwanda, for example, and they're planning. So Vision 2030 is a big encouraging story. The trebling of electricity production in the space of roughly 5 years, it's great. If the government can deliver that, it's going to reduce power costs, as they say. It will attract in manufacturing, which comes back to that education I was talking about. There's a sufficient number of educated people here now that Kenya's ready for manufacturing. And sure enough, this year has seen Honda say 25,000 motorbikes factory is what we're going to build. Samsung saying we're going to build phone factories in Kenya. It's happening.
Some of this reality, I think, our own people don't really grasp at times. Why does that happen? Is that because people are too close to it and you're looking at it from a distance, or? I
asked exactly that. When I went to India in November last year, and I said, what did you not see in 1990, which is where I think Sub-Sahara is today? What did you not see in 1990? And they said the scale of the ambition was really huge. Infosys was a little IT company of $5 million. They got their first $1 million order from Nike, their first export order, in about 1991. And they're now a $7 billion economy. They had no idea how big it was going to be. Real estate.
Yes.
They had no concept of how well real estate was going to do. In 1990, educated Indians still leave the country. They would go to the West to become a doctor or to work in finance, failing to see that actually it was India, and understandably, but failing to see it was going to be India that was going to double and treble over the next 20 years. Actually, I feel it's slightly different here. I see more evidence of people coming back already to Nairobi and Lagos.
It's astonishing. I see that all the time. And I think also, going back to your point, which the quality of human capital, I think the remittances confirm the monetization of the human capital. So I'm confident about that as well.
I think people are aware there's opportunity.
Yeah.
I think what I found when I was drawing out what this would mean for Kenya, for example, or for Sub-Sahara, and you draw out and you say the growth rate's going to be no better than India,
yes.
that nothing's been learned. Let's just say nothing's been learned, and it's just as good or as bad, depending on your perspective, as India. Then Africa goes from $2 trillion to $29 trillion in today's money by 2050. And that's bigger than China and America put together today, in today's money. They're not going to be, America will keep growing, China will keep growing, but I'm saying that's how big the opportunity is. And I think that's the hard thing to grasp. But of course, it could be better than that. It's possible, and I think conferences like this might make it happen. You bring in the best experts, you take the best advice you can. There's so many more examples of success to say that worked there. Agent banking worked in Brazil. Let's try it in Kenya. It's been a fantastic success. So I think these examples actually mean I might be being too pessimistic.
Oh, wow. And you were saying that you felt the policymakers here were more inclusive and more open-minded than the policymakers might have been in Eastern Europe, when Eastern Europe sort of started to find its... Was that a fair comparison? In Eastern Europe, everyone had been brought up on communist orthodoxy. All of the senior layers of every central bank, the Ministry of Finance, had been brought up on communism, and that had failed. That's why these countries had changed in the 1990s. So their education levels were high, but just in the wrong education. And you don't get that here. You get people who've been brought up in a market economy, and perhaps who've had experience abroad, who understand markets. And they're so much more open and, I feel, accepting of advice and ideas, but also have their own ideas. I mean, it's Kenyans are doing it for themselves, really, but they're taking, for what I can see, they're taking the best advice they can get. No, I think that's great. Now, you started your presentation by asking everyone who owned Kenyan equities to put their hands up. And obviously, the Nairobi Stock Exchange has been, I think, a top 10 performer last year and probably this year as well, close enough. And the returns have been very dramatic, and it's been a trend across Africa, ex-Egypt and ex-South Africa. Firstly, that trend, is that people now appreciating Sub-Saharan Africa better, moving away from historical gateways, or would you say I'm reading too much into that?
No, I think that's right. I think already Africa was capturing attention in 2006-07, when Renaissance Capital set up here, for example. But when the global financial crisis came, I think people had assumed that the interesting story for investors for Africa was perhaps an end of the Greenspan credit boom, that it was as the tide of liquidity reached its farthest outreach, then Africa got lifted. And they weren't convinced that was going to be able to sustain itself. And then you looked at the GDP numbers in 2009, and Africa didn't collapse. The countries here were still growing at 2, 3, 4% a year, and I think that's forced a recognition that the continent was in a process of change. And I think as we've gone into 2010, 11, 12, and even now, developed markets we know are fragile, requiring huge central bank intervention to make them work in, say, Japan, and unlimited liquidity out of Europe just to try and lift that continent out of recession. Africa's been doing extremely well throughout. And I think our book might have helped because it was an emerging markets economist who had 20 years experience talking to investors about saying, this is what we're seeing. We had a huge interest across the east coast of the States and west, actually, across Europe, in Asia, South Africa.
So do you think there's been a big narrowing of this sort of gap? To me, there was a perception gap.
I agree. And that perception gap, when we were writing the book last year, it was common to find people who didn't understand the African story at all, had never seen a picture of modern Africa, just didn't conceive of the continent realistically. And now that's much less common. I don't often hear people write off Africa in the way that 18 months ago that was quite common. And you've seen, as a result of that, you've seen frontier funds collecting money across Europe, across America, and that money's being invested, and that is, I think, what's lifted, say, Nigeria and Kenya, 30, 40% since we published the book. I mean, it was doing well, it was doing better already before then, but that money, I think, has helped these markets sustain themselves this year at a time when people have had questions about Russia, questions about Brazil, and even India's had a bad year.
The emerging markets have had a very poor year.
So there's been an outflow of capital from global emerging markets, but frontier markets. That's the new story, which I think people have begun to see for the first time.
Now let's go to the Eurobond. You know, Kenya's expected to sell its first Eurobond. A lot of talk of it being the biggest sub-Saharan African issue. Do you feel confident that the Eurobond will be well received?
There's going to be plenty of appetite for Kenya for a large bond, a large liquid bond out of Eastern Africa. And Kenya's a market which a number of debt investors will already know from having bought Kenyan shilling debt. And equity investors obviously know from the success of companies like Safaricom and Equity Bank and KCB and so on, Happy River. So there's some knowledge, and there's an appetite for diversification from global investors. I think the difficulty for the government's going to be on where they choose to price that bond.
Yeah.
And I think it's a completely understandable difficulty.
Yes.
If you're a minister, if you're a Kenyan, you want to get the lowest possible interest rate on that bond. You want to make sure that there's more money that the government has to spend on all of the things that Kenya needs to spend money on. And you shouldn't be giving it to foreign bondholders in the West. However, to get a successful bond launch, to get a bond which the investors feel they've done well to buy, means giving them a little bit of extra, an extra premium, which could be even 0.5% more than you might want to pay, just so that the bondholders are feeling like Kenya's a good country. And the next time Kenya comes back to the market, which could be in 3 years or 5 years or 1 year, they'll say, oh yeah, Kenya, I bought that bond. It performed well. I'll buy the next one. So the difficulty is trying to weigh up your reputation in the international markets with your desire to get the lowest possible interest rate, which you want to do for society in the short term. And I totally understand that. It's going to be difficult. I don't envy the government on that choice.
That's right. And I think the problem in part is that, you know, one of our sister East African countries issued a bond when the US Treasury was practically at its lowest point of the year. And there's been quite a sharp move.
I really do hope people understand that there was a bond.
I don't think they do. This is the issue.
They should, because there was a bond bubble. And it was, we talked about it a lot, when Nigerian 10-year dollar bonds were yielding 4%.
Yes.
And Rwanda could then issue at 6.8 or so. That was because everything was artificially low. And Kenya, that was artificial. Rwanda couldn't issue at 6.8% today. They probably couldn't issue at less than 8% today. Kenya might be able to.
Yes.
And that's a mark of the fact
that Kenya's...
optically
they need it below 8, it seems to me.
So it's plausible. It's just that trying to balance. It's a lot of things. You've got to see US Treasuries moving up and down. There'll be good weeks to issue and bad weeks to issue. And there's the issue about how much do you satisfy the international bondholder, the international markets versus your own people. It's a tough one.
Would you care to leave us with any closing comments?
The opportunities here are dramatic. I think it's about what I'd like to see is the government continuing to invest in education, continuing to invest in infrastructure, continuing to roll out that, but at the same time having to constrain these twin deficits, the budget deficit and current account deficit. Markets are relaxed about with Kenya at the moment. That can change in a year or two, and the government. I think of a country like Turkey, which has got many of the same problems of Kenya: current account deficit, energy import dependency. They have to import everything, and I think what's made them so successful in the last 10 years has been that the government's managed the budget deficit very tightly, and that might be a model worth considering.
There is a view that the current account deficit is in part because of the import of and if you strip that out, you would actually be in a small surplus.
Yes, I hear that, but I also see quite good credit growth numbers, which I'm very encouraged by, because I think credit growth is one of those stories that's very interesting to investors and can help drive growth. You get the same in Turkey, and some years it gets a little bit too excited.
Yes.
And then the current account tends to get a bit wider, because it's not just investment goods. It tends to be a bit of
we do suck in a lot of
as well.
Yes.
So it's just keeping that balance, and there's no magic exact number, but the government needs to be aware of that, and I think that probably is influencing their policy on the budget right now.
Are we at a tipping point?
In which way?
You know, at this tipping point where we're going to accelerate substantially, or do you think that's still a year or two away for Kenya?
Based on the forecast we've done, and I can't, for Kenya, our forecasts for the next year or so are 5.5 type growth rates. And actually our forecasts, unexcitingly, are suggesting that if Sub-Sahara continues to copy India, as I was saying, actually this decade it's going to be an average growth across Sub-Sahara of maybe 8%. So there could be there could well be better years as we head towards later in this decade, and even more exciting years. But even 7% growth a year for 10 years is enough to double your economy.
No, that's right.
And once you get it to 10%, which I think is possible in the 2020s, you're doubling your economy every 7 years. And that's hard to imagine.
No, it is.
But that's the course that Kenya seems to be on.
Charles Robertson, thank you.
Thank you very much indeed.
Thank you.
Pleasure.
Was that all right?
Yes, great.
Good.